Bitcoin is better described as a city in cyberspace. If you imagine a city that's 276 blocks high, 276 blocks wide, 276 blocks deep, that would be about 21 million. And it's a network, a shared network that people all around the world voluntarily enter into. And you can buy one of those blocks and you can take custody of that block and you can keep it for 100 years and you can give it to your children's children's children. So if you think of it as digital property or the greatest city in cyberspace, it's...
Today, we dive into the insightful perspectives of Michael Saylor, an expert in the cryptocurrency space and founder of Macro Strategy. Saylor, a former CEO and executive chairman, claims that Bitcoin, the largest cryptocurrency in the world by market capitalization, is currently going through a revolutionary period. Saylor stressed the importance of the U.S. Securities and Exchange Commission's approval of multiple spot Bitcoin exchange-traded funds, ETFs, in a recent interview. This regulatory approval will be viewed as a paradigm-shifting event, signifying a fundamental transformation in the way traditional financial circles see and embrace Bitcoin. As a verified asset class, Bitcoin is no longer disregarded as magic internet money or a means of financing illegal activity. The entry of major financial giants such as Fidelity and BlackRock in the Bitcoin space reinforces its position as a sustainable investment option as opposed to a fad. Financial advisors and institutional investors are likely to participate in spot Bitcoin ETFs more frequently as a result of their performance, which is evidence of the currency's increasing popularity. Let's hear what Michael Saylor has to say next.
I think in time they will. I think in the years between 2025 and 2028 or 2029, you'll start to see companies starting to adopt this strategy because it gives you a very low cost of capital and because Bitcoin is a good asset, because there's a lot of demand, etc. But we were unique because we had a need. We were in the right place at the right time. And as I said, we didn't really have the plan in the middle of 2020. The plan presented itself. It's hard for anybody else to look at this because 18 months ago, Bitcoin was 16,000 and everybody thought the crypto economy was going to zero. So it's only really been in the past 6 months. You could even argue 12 weeks. It's really January when the SEC approved the spot ETF that the mainstream consensus in the world was Bitcoin is an asset, it's not going away. I used to say, if it's not going to zero, it's going to 1 million. But there are a lot of people thinking, oh, it's too good to be true, the government will take away from you, it'll be banned. And I think turning the corner was really essential. And the turning of the corner is when people realize it's not a cryptocurrency, it's a digital property. And if it's a digital property, it's a store of value, and I'm going to buy it as a store of value or buy it through the ETF and hold it a long time. And when the SEC approved 10 Bitcoin ETFs, mainstream Wall Street consensus shifted to, okay, it's going to be around, and then opened up an avalanche of enthusiasm. And that kicked us into this Bitcoin gold rush era. For the next 10 years, every quarter, there'll be more enthusiasm, more adoption, more awareness. But it's like year one of Bitcoin as an institutional asset. Companies will do this, but it's hard for them to move that fast. Normally, if something is new for the last 3 years and you're in the 4th year, you're an early adopter. So that's how fast corporations move. So I think it does happen, but I think that we're still very close to the crypto winter. So many bankruptcies, so many meltdowns. We need to get a little bit of distance from that and stabilize. And at that point, more conservative companies will start to move into the space. There's still a lot of regulatory uncertainty. I mean, it wasn't clear what's going to happen with every single crypto application or use case everywhere in the world for the past 24 months. So there's a lot of people have been waiting for certain shoes to drop or for certain decisions to be made. I think that what you could say in the middle of 2024 is it's pretty clear in the U.S. capital markets that the regulators have embraced Bitcoin as a commodity, a digital commodity, and the investors have embraced Bitcoin as a digital property or store of value investment. And those two things there's broad consensus on. And if you're building something based on those two insights, you can build a very, very big business, right? Like MicroStrategy's gone from 600 million enterprise value to 35 billion. You can build something big But those two insights, they weren't clear 2 years ago. Yeah. I couldn't have said, 10 companies on Wall Street will all agree on that 2 years ago, and the SEC will let you sell that. So I think we're just 12 weeks into the institutional adoption phase, and every day we watch, money flows into the spot Bitcoin ETFs, and you see 50 million, 100 million, 200 million. You can see it's starting to simmer. And I think that will cause people's wheels to turn, and they'll start to think about what's the next thing. I think we're still early, and that's a good thing, right? Because what that means is there's an opportunity for you.
Yeah, exactly.
Right? Okay. You don't want everybody to agree. You want everybody to be confused about things so you can act.
Like it or not, Bitcoin is quickly becoming the Apple and Google of digital assets, surpassing the limitations imposed by tangible commodities like gold, grain, and oil. Consider gold. Miners can always take more from the depths of the earth, crowding the market and forcing prices down, even if its price skyrockets. It's possible that the 20 million tons of gold that are estimated to be in our oceans will reduce the value of gold. The prospect of greater pricing encourages miners to go farther, even if it is unlikely that all of it will be extracted. However, Bitcoin functions in a class alone. It is not affected by these variations because of a set supply limitation. Bitcoin gets beyond restrictions on even goods with relatively fixed supplies, such real estate or rare artwork. Going back to Michael Saylor's conversation, as he explores in more detail the crucial role that Bitcoin plays in our quickly changing digital environment, let's hear his following words.
Bitcoin is better described as a city in cyberspace. If you imagine a city that's 276 blocks high, 276 blocks wide, 276 blocks deep, that would be about 21 million. And it's a network, a shared network that people all around the world voluntarily enter into, and you can buy one of those blocks, and you can take custody of that block, and you can keep it for 100 years, and you can give it to your children's children's children. So if you think of it as digital property or the greatest city in cyberspace, it's when you move into Manhattan and you tell all your friends to move in Manhattan, and they all move to Manhattan because Manhattan's the greatest city in the U.S. and the price of land in Manhattan goes up. That's not a Ponzi scheme.
Yeah, exactly.
That's an example of a place where everybody wants to live because it's the best city to live in North America. And people have been moving to Manhattan for 400 years. And the price of real estate in Manhattan has been going up for 400 years. Imagine a city in cyberspace where 8 billion people want to live. And, they don't live physically, but they live economically. Everybody in the world has a problem. And the problem is they would like to store their capital and preserve their capital. And they'd like for someone not to steal it, right? So they all need this bank in cyberspace where they can store their life savings and know that it will hold its economic value. If God came down from heaven and offered to set up a bank with 21 million coins and keep the money in heaven and let you telepathically zap it back and forth and make sure no one cheated anybody and do that for the next million years, that would be a better bank than any bank we have, and it would be a better currency than we have. But, God's not going to do that. And so the next best thing is if you create a bank based upon cryptography, based upon computer science, and you give a copy of that software to everybody in the world that wants to use it, and then everybody voluntarily buys and sells those units we call Bitcoin and holds them if they wish to hold them. And anybody that tries to cheat the system gets kicked off the network. So Bitcoin is better thought of as a protocol, a fair, equitable protocol for people to trade economic value or store economic value. And it happens that the more people that use the protocol, the more valuable it becomes. Not so different than English, the language. The more people speak English, and the more money the people that speak English have, the more useful it is for you to learn English. And like New York City, the more people that move to New York City with more money, doing more things, the more valuable your real estate is in New York City. So it's basically a network. It's the world's greatest monetary network, a digital monetary network. And what's special about it is it's open, permissionless. Nobody owns it. No country controls it. No company controls it. No individual controls it. It is the result of an experiment where the 50 predecessors all failed and thousands of copies failed, and it's the winner in this Darwinian market economy for money. And what you have is a network where hundreds of millions of smart people with money have entrusted hundreds of billions, now $1 trillion or more of money to the network because it's a much more efficient way to do things. And that being the case, it's just the world's first scientifically rational engineering protocol for economics, for economic cooperation, or for monetary interchange. And that's something everybody needs. Nobody can stop, but most people don't understand. And the reason that it makes sense to spend 100 hours studying it right now, and the reason it makes sense to buy Bitcoin is all of my best investment ideas are things nobody could stop, everybody needs, and nobody understands.
Michael Saylor compared Bitcoin to a city in cyberspace, with 21 million blocks that people may invest in and safely hold onto for decades in his explanation. He compared this to owning real estate in Manhattan, where prices have been rising for decades due to demand. Saylor highlighted the role that Bitcoin plays as a digital bank, providing a safe, decentralized platform for money storage and protection. He emphasized that establishing a bank by divine intervention would be impossible, and that Bitcoin serves as a better option as a publicly accessible cryptographic technology. Comparing the rise of Bitcoin to that of the English language, the more widely used it is, the more valuable it becomes. He presented Bitcoin as a just and equitable network for exchanging and storing economic value. As a result of its successful evolution in the competitive money market, Bitcoin functions independently of a central authority, in contrast to conventional currencies. Finally, Saylor emphasized the value proposition of Bitcoin, pointing out that it is an asset that is generally misunderstood, despite being indispensable and required by everyone. Until next time, happy investing.